Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. In this video, I will break down the characteristics to a bullish and bearish month. Traders want to find trending markets, but often fail to see the signs of a bullish or bearish month. I will show you how to filter and categorize these months. Stay tuned. Leave the indicators alone. This will be broken down into 3 steps: core curriculum, chart activity, and lesson plan. Let's jump right into our core curriculum. There are 2 types of trending months. You will either face a bullish month or you will face a bearish month. They are both similar in fashion, but inverse to one another. So you see on the right, we have a classic depiction of what a bear is and a classic depiction of what a bull is. If you've been trading any asset class, whether it's outside of FX or cryptocurrency or futures or commodities or stocks, you know that these 2 icons represent a certain trend in the market. One is going up, which is bullish, and one is going down, which is bearish. The bulls versus the bears. Here is an example of a bullish month. This is US dollar versus Japanese yen, February 2023. Granted, this is hindsight. We can see the market was trending up for this month. It was bullish. As the month progressed, the price kept going higher. Let's talk about some key factors to a bullish month. Bullish month characteristics are as follows. Price moves below the monthly opening price. A swing low forms below the month's open. Price purges a previous daily low and reverts back to a previous daily high. The market creates a shift to the upside. Higher swing highs and higher swing lows form. Let's see if we can apply any of these characteristics to that UJ example. Looking at this example, we all know that this is hindsight. However, I tell traders all the time, hindsight is going to be your best friend. The reason I say that is because hindsight grants you exposure, and that exposure grants you experience. You're being exposed to how price is being moved methodically from point A, let's say the point A is the start of the month, to point B, the end of the month. You want to know the methodical sequence to how it's getting there, in what fashion. And I believe that the characteristics that I listed here are very crucial points to understanding how a bullish month is formulated. Let's take a look. Price moving below the monthly opening price. Do we have that? We absolutely do. We can see it happens twice. This is the opening price here, February 1st. Price drops below it, runs up, drops below it, and runs up, and continues that bullish trend. That is something I've noticed when it comes to bullish months. Price is going to most likely drop below the opening price of the month. Next, we have a swing low that forms below the month's open. Do we have that? We do. We have 2 swing lows that actually form below the open. We have the swing low here and here. Let's mark that off as well. So we have this. It's a swing low. Now, what makes this a swing low? Just a quick refresher. This is a swing low because the candle on the left has a higher low, and the candle on the right has a higher low, and the low in the middle is the lowest point. It only takes 3 bars. In this instance, we're looking at it on the daily time frame, so it only takes 3 daily candles. Here as well. So that checks off. We have a swing low formation that forms below the open here and here. Price purges a previous daily low and reverts back to a previous daily high. Now this is the same thing as a swing low, because what's happening in that swing low is exactly what's read on this 3rd bullet point. Price here is purging the previous daily candle's low here, right? And then the following day, price is reverting back to the previous daily high here. So we can see price running the low here and then reverting back here. So you have a purge and revert, which is all happening within this 3-bar setup. It's a swing low, which is a purge on the previous daily low, and a revert back to a previous daily high. You can see the same thing is occurring here. This middle candle is purging the previous daily low. Then the next candle is reverting back up towards the previous daily high. So we have that checks out here. The next one that we have is the market creates a shift to the upside. Do we have a shift to the upside? Let's check it out. So a shift, in my opinion, in my definition, is when price runs up with speed through a swing high with a fair value gap. So we can see there's a fair value gap here. So we can mark that off with a box. We'll make it red. We'll draw it out. And do we have a swing high that's ran through with this speed to the upside? We do. Let's find a swing high. Just want to make sure the high is correct. This is the highest point. That's a swing high that's been ran. So there's a swing high broken with fair value gap. So that's what's happening there. Price is running up with speed and running a swing high, and a fair value gap runs it. Price comes back down into that range again, as you can see, and even below the open once again, and then runs up higher. So that checks off as well. So the market creates a shift to the upside. That's your shift to the upside. Higher swing highs and higher swing lows form. Do we have that as well? Let's check it out. So if we take off this, we take off this, we just want to make it clean so that we can all see it together. For the last bullet point, do we have higher swing highs and higher swing lows? So let's see all the swing lows. I'm just going to mark it off. That's a swing low. That's a swing low. That's higher. Do we have another one? Yeah, we have one here as well. So all these swing lows, we're going higher. And even, let's see if this one is one. It is one. This is a swing low as well. This is the lowest swing low. This is a higher swing low. This is a higher swing low. This is a higher swing low. Let's check out all the swing highs. You have a swing high up here. We have a swing high up here. And we have a swing high here. It's higher than that one. And we have a swing high here. So you have higher swing highs and higher swing lows. These are my bullish characteristics. Here is an example of a bearish month. This is British pound versus US dollar, GU, August 2022. Like I said before, granted this is hindsight, we can see the market trend was clearly bearish. As the month progressed, the price kept going lower. Bearish month characteristics are as follows. Price moves above the monthly opening price. A swing high forms above the month's open. Price purges a previous daily high and reverts back to a previous daily low. The market creates a shift to the downside. Lower swing highs and lower swing lows form. Let's take a look at the example GU and see if we can see any of these characteristics applied. Looking at this example, we're going to see how many of these bearish characteristics we can apply to this bearish month. So the first thing is price moves above the monthly opening price. Do we have that? Let's see, the open is here. So this is the monthly opening price. And we can see it moves above it several times. And after moving above it several times, we can see price continues to follow a downward trend. It goes up here one time, a second time, a third time, a fourth time, and even a fifth time, and then continues to sell off. So that checks out. A swing high forms above the month's open. Do we have that? We do. We can see the actual start of the month, August 1st, is a swing high formation. Now, just for quick reference, what is a swing high? A swing high is a candle that has a lower high on the left and a lower high on the right. The middle candle is the highest, so that makes that the swing high. I'm going to put that in red. So that checks out. But then we also have other swing highs that also form above the monthly opening price. So we have one here. And we also have one right here as well. So there are three swing highs that form above the monthly opening price. And after these swing highs were created, price continued to follow a downward trend. The next one is price purges a previous daily high and reverts to a previous daily low. Do we have this here? Yes, and it's inside of these swing high formations. This candle here is running up and taking out the previous daily high. So it's purging the buy side above this high right there. And then the next candle is reverting back down to the sell side, taking out the previous daily low there. That's all happening in that 3-bar formation, this swing high formation. It happens here as well. Price comes up, purges the previous daily high, then the next candle reverts back down to the previous daily low. Same thing along the lines here in this formation. Doesn't get there, but eventually you can see how it reverts right back down to sell side. See how price makes that high point? This candle here, it's low, does not run all the way down, take out the middle candle's low. But you can see in the near future, the next 2 days, price comes down, takes out the previous daily low, previous daily low, previous daily low. It ran up, took out previous daily high, and now it reverted back down to previous daily lows, going all the way down. You can see that here in this formation as well. Once more, you can see that here in this formation as well. Run up, previous daily high, run down, revert back down to previous daily low. The market creates a shift to the downside. Now let's see if we can find the shift here. And now the way I identify shifts is price running a swing low with speed to the downside, a fair value gap to the downside. So you can see here, there's a fair value gap here to the downside. We'll mark it off in blue. And that's that swing low that it runs through here. Mark it off in blue. So the swing low is ran through with speed, leaves a fair value gap. There goes a shift to the downside. And after this big push down, you can see price continues to trade lower. We don't see price trade back up into it, but you can see price continue to go lower. But there is a shift that occurred here, which insinuated that price most likely is going to continue going down. If it were to trade back into it, it didn't. It get a small pullback though, and then continue falling lower. Now the last one, we're just going to clear the whole chart for it. The last one says that we're getting lower swing highs and lower swing lows. So let's mark off all the lower swing highs. So that's a lower swing high. That's a lower swing high. But we can see this swing high though that I'm marking off here. Put it in red. It's a buy stop raid. So price comes up and raids it out, but it doesn't take out the high here. So this is just a raid on buy stops, commercials, right? Market maker gets everybody long because breakout traders think that it breaks the high. It's probably going to continue going lower, which could happen, but we can see it doesn't happen here. But then it continues to drop short. But then we have a lower swing high here that forms after that purge of that high, that buy stop raid on this high. We got a lower swing high here. We got a lower swing high here. We have a lower swing high here, which also turns into what? A raid. Technically, this swing high wouldn't be confirmed until the actual low here was broken. But in theory, if we were just going off of the definition of a lower high on the left and a lower high on the right, this is a swing high. Price comes up, purges that, right? Runs out, takes it out, buy stop raid. But then after that, it doesn't take out that higher swing high that we have up there. Creates another lower one compared to this one up here. And then we get another lower swing high again. So that's all the swing highs. Now, if we were to take a look at the swing lows, let's find a swing low. You have a swing low here. Mark it off in blue. We have another swing low here. The swing low actually is higher, but it is a swing low. But you can see how this swing low is not lower than this one. We have another swing low down here. We have a lower swing low. This one happened to not be a lower swing low, but overall, we can see how this bearish month checked the boxes of these characteristics. It's not going to be perfect the way you want it to formulate every single time, but you can see how these characteristics are being applied to this bearish month here. For our chart activity, we're first going to open up a daily chart and mark out the start and finish of a month. we're going to be looking for bullish and bearish months that show range expansion. Step 2, we're going to mark out the opening price for the month, swing highs, swing lows, and speed. And finally, we're going to think critically about how the month progressed. Let's take a look at a few examples. We're going to be looking at gold versus the US dollar, and we're going to be looking at the month of February. So for those that have been following, or for those that know, I tracked gold for February in the daily updates. So if you look on my playlist and you look for the 2023 daily tracking, you're going to see me tracking gold that month every day, showing you what I was expecting gold to do. So if we bring it back to February, we could clearly see with hindsight, it's a bearish month. Price opens here, runs up, creates a high point, comes down back to the open, and then creates range expansion all the way down. So it's loading, going down, 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 down. It gets to a low point. After getting to that low point, it then pulls off its low and then closes up here. Now, if we infer to this on the daily time frame, we're going to get a lot more information out of it. But just solely looking at it from a monthly candle, we can clearly see that there was a move up, then down. Let's take a look at what it looks like on the daily chart. So we start with the first of the month and then the end of the month here. So we'll move the candle over one more. There we go. Now, looking at this chart, the first thing we're going to do is mark off the opening price. So where's the opening price? Here. So that's the start of the month. We could see how price pulls up above the opening price at one point in time and continues a trend lower. That is one of the characteristics I like to point out when it comes to a bearish month or anticipating a bearish month. You would like to see price run up above the open and then continue to break down. While doing so, it also created a swing high formation above the opening price. Now, for those that know, the opening price has an ideology around it. Anything above the opening price is a premium or overbought. Anything below the opening price is a discount or oversold. That is your natural price indication for overbought and oversold. That's why the opening price is very crucial when going into a new month. So if I was anticipating, and as you guys already know from the daily tracking, I voiced this already, I was expecting price to go lower for the month of February through seasonality, through technicals, through fundamentals. But from price action, I said I want to see price get above the opening price and go lower. And that's exactly what we got from gold. We can also see that there's speed to the downside. And before we get to the speed, let's just mark off that swing high. So we're not forgetting anything here. I want to make sure you guys are getting everything out of me and I'm not leaving you guys wondering. So that's a swing high. I want to make everything clear. Swing high forms above the open. That's one characteristic. The price moves above the open. That's another characteristic and continues going lower. We have a characteristic of speed here, right? Speed is going down. Fair value gap through what? A swing low. So we have a shift in the market right there. That swing low is rated. Price trades into that range and that speed, and it continues to sell off, as we can see. We can also see there is lower swing highs in the marketplace. So if we were to consider this the higher or the highest swing high for the month, we can also see there's lower swing highs forming. This is a lower swing high formation. You can see another one here. This is a lower swing high formation. We have another one here. Lower swing high formation. It's showing you signs of being bearish. There's another lower swing high formation. You can see price fails to come up and take out that high. Instead, it gets close and continues to break down. On the flip side, we have lower swing highs. So this is the lowest, well, this is the highest swing high we have for the month. Let's go higher swing low. So you have that higher swing low here. Then if it's going to be bearish, we're going to see lower swing lows after the higher swing low. So let's find a lower swing low in the price action. We have one here. That's a lower swing low. Do we have another one? We do. We have one right down here. Lower swing low. And these are the characteristics I look for when anticipating a bearish month. In order for me to understand this, I had to have studied previous months to see how it formulated. That's how I was able to arrive to a bearish gold in February. So if you go and watch that playlist and you watch each day of me breaking it down to you, you'll see the same ideas that I'm showing you here in this video was unfolding to me live. And I was expressing that to you guys as the days went on, the weeks went on, as the month progressed. I was expressing the characteristics of a bearish month. And exactly what I said unfolded here. Not every time it's going to be perfect, because there are going to be moments in time where price does raid a swing high, right? So instead of this making a lower swing high, there might be a moment in time where price comes up and takes out that swing high and then continues going lower. You're going to have those situations during the month. But here was just a great example to once highlight again. UJ, I'm going to take a look at the month of April here, April 2023. So let's bring it back to April 2023. We could clearly see with hindsight, it's clearly a bullish month. At one point in time, the market opened here, dropped below the open, came back up above the open, created range expansion, loading up, and it got to a high, fell off its high, and closed here. So you know at one point in time, price dipped below the opening price and ran up. That's a good sign for a bullish month. That is one of the characteristics, just seeing it based off of the monthly chart. But when we break it down to the daily chart and we start to get to the details, right, there's more data when you drop down to the lower time frame. You get to see each day of that month and how it progressed. So it's going up. But let's mark off the opening of that month. We have here is Monday, April 3rd, and then we got the end of the month as well. Go up to May. We'll move it forward one day. There we go. And we're going to mark off the opening price, and we're going to see if price drops below the opening price at any point in time. We do. We can see that price dropped below the opening price. So price made a pull down, ran back up, pulled back down, ran back up, and it continued the trend higher. So that's one characteristic that we could check off here for this bullish month. We can also see price creates higher swing lows. Let's mark that off here. So we have the lowest swing low here. That's a lower swing low formation. Do we have a higher swing low formation? We do, right here. That's your higher swing low. Higher swing low. We have another higher swing low. We do. You can see here, I'm not going to write anything here, but like I said in that other example, that could have happened. Sometimes you'll have price run or raid a low and then go back higher. That's a sell stop raid. There's nothing you can do about that. Sometimes you got to live with it because you may have been expecting higher price action here after this higher swing low might have formed. But as you can see, price after making that higher swing low was raided and then created a higher swing low relative to this one here. So we'll mark that one off as well. So this one is a higher swing low. Even though the previous or most recent swing low was raided before this one was created. That's going to happen. The market makers are going to run lows and then push price higher. And all these swing lows, there's that purge on the previous daily low, and then the next candle reverts back to previous daily high, and you can see it trend up and only start taking out previous daily highs. Once you get that purge and revert, odds are you're able to probably catch a leg for a couple days, maybe a week. But normally after that purge and revert, you're going to catch a trending model. Look at how it creates a higher swing low. There's a trend here. Price doesn't want to take out the lows anymore. It wants to do what? Take out highs, 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 until eventually it has to create another higher swing low. And you can see how price pulls back down into what? Some fair value gap here. And speaking about a shift, we can see that there isn't any shift here on this time frame via daily that really stands out because there's no swing highs. Correction, there's no fair value gaps running a swing high. So even though that this is a fair value gap, I don't see the fair value gap running a swing high formation or breaking through a swing high formation. But you can see how price does come down into it, respects it, and moves higher. Once again, it does it here, and then goes higher. On the flip side to the swing lows, we also have the swing highs. So this is a swing high formation. We have a higher swing high formation that formed here, which was also then broken. Another higher swing high formation here. Look at that here. Don't confuse yourself here with the swing highs. The candle here to the left is a lower high, to the right is a lower high. Same thing with this one here. This candle's high. There's a lower high on the left down here, and there's a lower high on the right here. Same thing with this one. Lower high on the left, lower high on the right. So the swing highs are getting rated and they're going higher. That's a good sign for a bullish month. You have another swing high here. And then you can see ultimately price runs that swing high as well. With speed too. Look at the fair value gap. Runs right up to that draw on liquidity there. Because that's where the buy side is residing. But look at how price follows the characteristics once again in a bullish month. And we're looking at a completely different pair. This is UJ. Price comes down, runs up, comes down, runs up, comes down, runs up. Below the open. And what's below the opening price? Discount. It's cheaper to buy this month. But in order to understand this stuff, you need to expose yourself to hindsight and then further investigate on your fundamentals, your macros, and your technicals. So this was another great example to show you guys here on a bullish month. The same characteristics are showing itself here. The way the month is methodically forming. If it's going to be an up month, it's most likely going to do something along the lines like this. Not going to be perfect like this, but it's going to definitely give you those characteristics that I listed. At least 3 or 4, or maybe all of them are going to be applied for that month. The more, the better. But as the signs keep increasing, that should further your confidence in saying, okay, the month is going to be bullish. Let's take a look at another example. Looking at this example, we're not looking at FX anymore. We just changed asset classes. We're looking at Tesla, so we're looking at stocks. Let's take a look at the month of December 2022. Let's bring it back there. We can see Tesla was bearish for the month of December, granted hindsight. We can see at one point in time it opened here, ran up, and then started to create range expansion down to this low, fell off from the low, went back up and closed here. So let's take a look at what this looks like on the daily time frame. Like I said, the daily is going to give you more data to understand how each day progress to make up that one monthly candle. So start off, the month is here, and the end of the month is here. There we go. First, we're going to mark off the opening price for the month. You can see it's here. So this is December's open. And we can see the open, the first day was the actual high, right? December 1st makes the highest high of the month. But within that day, if we look closer, it makes a swing high formation above the opening price. So that's right here. That's your swing high formation. So far, we're checking boxes of what the characteristics of a bearish month will most likely hold. The swing high formation here. And as the month progressed, we'll notice that there's lower swing high formations Where's the next lower swing high? Here. This swing high is lower. This is a lower swing high. Can we find another one? We absolutely can. I just want to double check that high is higher than the one on the left. 160.93, 160.99. So this high is higher than the candle on the left and higher than the candle on the right. That makes that the lower swing high. And price continues to trickle down lower. And we also get a lower swing high right at towards the end of the month. And we got that pull off from the low of the month. Price coming back up here. We can also see price creating shifts to the downside. We can see here, this is not a fair value gap. However, this is a volume imbalance. So we can see the candles are physically not touching. Just another ICT PD array that we're mentioning here. So you can see that there's a volume imbalance here. And we can see that volume imbalance from that candle's low here runs through. We'll mark it this way so it makes more sense. Blue. Where's that swing low? Right there. That's a swing low that's ran through with this PD array, this volume imbalance here. Price trades back into that shift in the market structure and it continues to go lower. We can also see here, once again, there goes a fair value gap here to here. So we're not confusing ourselves. This is a volume imbalance. I'll make it as small as possible to see. And then this is a fair value gap, or what I would call speed, or what ICT would also call a SIBI. And we can see from that candle's low to this candle's high, what does it do as well? It runs through a swing low. So another shift here. More insight, showing you that price action wants to go lower. The market makers, someone with larger pockets than me and you, made price go down with speed to run this low here. They really wanted to get to that low. And if you see price return back into that speed, fair value gap or SIBI, sell side imbalance, buy side inefficiency. The market was inefficient in filling buy side, running down really fast. Gets close to it, doesn't get in it, but then continues to break off lower. We can also see another characteristic. We get the lower swing lows. So this, zoom in, is a swing low. Then we get a lower swing low. Let's see where it's at. We don't get one until all the way down here. And that's a lower swing low. So the same thing can be applied. Doesn't matter the asset class. As you can see, this isn't FX. This is stocks. We're looking at Tesla here. The same thing applies. The opening price ideology. Price sold above the opening price. It's ideal to catch the best sell opportunity in a premium. You want to sell at the highest price possible. And then as price continue to go lower, there's short-term rallies here. Maybe people thought Tesla was going to go long. Market maker said, not in my house, and continue to fade it. And you get these short-term rallies and these lower swing highs where the optimism is, highly highlighted for the retail traders because they think it's a turning point, or break, retest, go higher, or a breakout in general, but only to lose that optimism and get crushed by the distribution lower. So this is just another example without looking at FX. Let's take a look at another stock example. Let's take a look at the month of January 2023. We can clearly see it's a bullish month. So at one point in time, it opened, created a drop down, a Judas swing, right? Faking the traders down to the sell side and running back up to the open, creating range expansion in the intended direction they wanted to, creating a high, coming off that high, and then closing here. So let's take a look at what that looks like on the daily time frame. So we got the start of the year here. And then we got all the way up to February. Like always, we're going to mark off the opening price because it's very important. That's the open, or that's the new year open. So that's the open to January. And we can see, with the hindsight, that price dropped below the open, then ran up. It had a few days in discount below the opening price. The fact that it's a bullish month, let's say you were anticipating this month to be bullish. What are you most likely going to do? You're going to wait for price to create a swing low formation below the open in a discount. And we can see that here. We can see that there is a swing low that forms below the opening price for January. Mark this off for you guys. That's the swing low formation. And it's the lowest low of the month. The first day of the new year was the lowest low that Apple was for the year so far as well. Because Apple went on a huge run after this month. From December to January all the way to now, I think now was the very first bearish month that we got. It's been on a very long run up. Now this month of August 2023, we've seen a bearish month start off. And we're going to take a look at that right after this as well. Swing low, performance below the open, discount. You can see a higher swing low. Let me just double check. This low is 124 and 76 cents. This low is 124 and 89 cents. So this is a higher low and this is a higher low. So there is a higher swing low formation. Higher swing low. So that's signs that the commercials are most likely buying, because instead of running this low, they create a higher swing low formation and push price back up from being so cheap, and then push price higher. We can also see here fair value gap, but do we get that market shift here via daily? No, we do not. But we can see how it does respect that fair value gap that we see here. So price comes down into that zone and then trades back higher. We can also see the rest of the higher swing lows as well. So we have the higher swing low here that falls inside that PD array as well. Very key tip right there. Normally, if the market is going to continue going higher, it's going to create that higher swing low inside the PD array. And you'll see that time and time again, no matter what asset class you're looking at. You can see it formed right inside that PD array and then pushed higher. Get a higher swing low here. Clear signs of the market still buying, short-term dip, and then we get another one here as well. It's a higher swing low. Then on the flip side, like I said, you also have the swing highs. So where's your most recent swing high? You had one here at the start of the month as well. So this candle was a swing high and also a swing low. Don't forget, a swing high just means the candle on the left has a high that's lower, and the candle on the right has a high that's lower as well. That's the highest point here. So that's a swing high. Then we get what? A higher swing high. And then it continues. Oops. And then it continues up. Higher swing high. It keeps breaking the swing highs. You see that? But it doesn't break the swing lows, because their interest is on buy side. That's the whole point in a bullish month. They're interested in targeting buy side liquidity, not sell side. If at any point it does target sell side in a bullish month, it most likely or possibly may be a raid on sell stop. So if price came up here and then came back down here and then continue going higher, you look to buy again somewhere above that new high. But I'm not going to get into too much detail about that, but you can see how it can be used as a sell stop raid to knock people out of their positions that were long, and just to recapitalize on stops to gain more sponsorship to go higher. You see how price continues going higher as well. I could also pick this apart and talk about all the down days because it's just so obvious to see. But if you don't know what a counter trend candle is, I definitely recommend you watching another video where I talk about that as well. But the down days, just briefly, you can see the market's trending up. Look at how every down day there was buying right after it. Just a real quick bonus in the video. And that's really nice to see. Now let's talk about Apple in recent time. So if we talk about Apple right now, and I want to take a screenshot of this because it's just very eye-opening when you see it. Let's talk about Apple in most recent times. So we get out of this. We have a bearish month here for August. Like I said, from January, it was running up for that leg up. Now we got a candle that's going down. Let's dissect this. Let's go into this month and dissect it and see what we have currently in price action and how it's forming. So that's August 1st. And we got September here. So we mark off the opening price. The opening price is here. We'll zoom in at the open first because price dramatically took a huge decline. That is a swing high formation that is forming, as you guys can see, above the open. That's the opening price. There goes your swing high here. This is most likely where the commercials were at their max net shorts. Right there at the beginning of the month. Right after these two up close candles, they sold off. And you see they purged the previous daily high. Let's not forget about that condition as well. They purged the previous daily high here with this candle here. Price runs up, takes out this high right there. There goes the purge. Let's write it out. Double clicks. Purge. Where is it going to revert back to? This candle here clearly creates a volume imbalance because the candles aren't touching. But you can see how there's a void in space here, but it reverts back down to this. To sell side. And ever since reverting back down to sell side, what has it been doing? Taking out only nothing but sell side. There are going to be moments where it does cause another purge and revert, which is going to be in the formation of what? A lower swing high, or a swing high in general. Look at this swing high here. Zoom into that. Investigate that a little closer. That's your lower swing high. But look at what is happening in that swing formation. What is this candle doing? It's running up and purging the previous daily high right there. I don't want to draw the line all the way out, but it's running that high here. And then the next day, it comes down and is trying to revert back to sell side liquidity. It doesn't get there the next day, but you can see the following day, it does. It reverts back down and takes out sell side. Here and here. It doesn't take out buy side. Purge up, take out the highs, revert back down to the lows. And that's what's currently happening right now in Apple. Overall, what I want you traders to bring home into utilizing your trading are the following. Use the monthly opening price to guide you. This is going to be your natural indication, no indicators, to tell you whether or not price is overbought or oversold. So utilize this going into a new month more often. Second, the swing points are key indications to what the price action is most likely going to do. Like we've shown throughout the video, if you're getting a higher swing low and a higher swing high, most likely you're in a bullish trend. Now vice versa. If you're getting a lower swing high and a lower swing low, you're most likely in a bearish trend. Don't let that go over your head. It's a very simplistic idea and approach to finding bias. Last but not least, dial in your fundamentals, technicals, and macros for the new month. Like you guys have been seeing, at the beginning of every new month, I go into detail with what I want my fundamentals, my technicals, and my macros. Figure out what those are for you. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoy this video, then I think you'll like these two as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.